Hey folks, and welcome to this video on the 3rd of May 2023. Today we're going to talk a little bit about currency strength. I have always been a huge advocate of currency strength because it's so incredibly powerful, but it's often misunderstood and misused, and so I just wanted to spend a moment to show you one of the many ways that it can be used. Okay, so the thing about currency strength, the reason it's interesting is because we can use it to show us which currencies are being traded relative to each other. Okay, and so, I mean, here, for example, you can see that this is the Australian dollar, the gold-colored line. This is the Australian dollar, and here we have the Japanese yen. And what you want to see in a situation like that is you want to look for the two lines that resemble each other more than any other. And you can see here, for example, that the Australian dollar is a relatively straight line, and the Japanese yen is also looking relatively straight in comparison to the others, of course. And so that is telling us that the strength in the Japanese yen is likely a result of the weakness in the Australian dollar. And so it's these two currencies that are being traded relative to each other more than it is any other currency. But notice as well that we have the Japanese yen and the Kiwi dollar, which is brown. And notice how these two really look like each other a lot. And so that is telling us that the Kiwi Japanese yen is likely also a currency that is being traded. Let me see if I can move that over there, relative to one another. So this should be moving down, and it's probably going to go down pretty quick because we have this very, very clear pattern in these two currencies relative to each other. So if we go back to this chart, you can see that these are almost mirror images of one another. Okay, and so when you see something like this, this is telling you that the reason this currency pair is trading the way it is due to the fact that the Kiwi yen pair is being sold off. Okay, so that's why this pair is moving down. It's the two currencies relative to one another. And so you want to try and train your eye to find these, because this is how you identify which currencies are being traded against other currencies. Because, I mean, of course, we could trade the Kiwi versus the Swiss franc. They're about to cross now, but the majority of the volume that is causing the Kiwi dollar to move down, the Swiss franc to move higher, it's not being traded via that pair. It's being traded via the Kiwi versus the Japanese yen. Okay, so this is where we're getting the weakness in the Kiwi dollar. It's super fascinating, and I'm thinking maybe it could be calculated mathematically, where we ran through the array of indices, and we look for the ones that resembled, I suppose, the opposite of the other, and the one that makes the closest fit is the one that's probably the one that's being traded in the moment and causing the strength and the weakness for a given currency. So this could also be something that we could take a look at. But I mean, what I've been doing all day today is actually, I mean, I've been trading currency strength exclusively, and what I'm doing is I'm waiting for the Australian dollar. Japanese yen was one I traded several times today. So what you want to see, I've been on the smaller time frames, is you want to see this pair. Okay, you want to see this pair diverge. Okay, and so if we go back a little bit, I want to see something that looks like this. I can't see all of it. I got to go back a little bit more. There we are. So what I like to see here is I like to see the thicker line, the thicker lines. I like to see them diverge, and then I want to see the shorter term lines begin to move together. And we started to see that around here. Okay, we go a little bit more, we can see maybe around here. Okay, this is showing us that we have strength in the Aussie, weakness in the yen, but the shorter term is telling us actually this is not sustainable, and the Australian dollar is burning off, and the Japanese yen is increasing in strength relative to the Aussie. So when you see a pattern like that, this is when we're seeing this reversal. And you don't always see that. Sometimes you'll see the short term just continue to stick to the longer term, and this is telling us that we're likely going to continue higher. But when they move back in towards the zero line, like you can see here, that's just generally a good indication that things are going to turn around. And you could see that very clearly here. And so what I was doing today is I was actually on the small time frame, and I've been selling it all through here early this morning. I was doing this on the 1 minute chart, and I was just watching this occur. So I was looking for, okay, so here we had the Japanese yen, which is strong, the Australian dollar, which is weak, and then they were starting to move towards each other. Okay, so telling us that we have a long, and that long was happening around here. Okay, so prices went up, we came down, and there was a nice long position that was taken up to the release point here, the point of origin for this move lower here. Then you see something else happen where you have the yen moving slowly towards the Australian dollar, which means it's moving neutral. But you can see here that the Australian dollar is starting to form a top, the yen is starting to form a bottom, and telling us that this is likely going to begin to move lower. So I've been actually I took some trades just in here this morning. Actually, not that long ago. This is actually probably 15 minutes ago. Just in here, I'm just kind of getting it around here and then getting out around the bottoms just here. And it's a really easy way to trade, but it requires that you do not leave your charts. I was having lunch with my wife, knowing I had a position on, and it's not good. I'm not present, and so this is something that you need to do when you can be top focused on the trade. But you can see here that we have these currency pairs, they're diverging, and so now for indication that this is going to move higher, I want the thin line to move in, and I want both the thin lines to begin to move towards the zero line. If we enable zero line, you can maybe see that. It'll pop back in a second. But you can see how these are pretty much a mirror image of one another. Okay, and when that happens, that's a good thing. That's telling us that the reason that this pair is moving is because that pair specifically is being traded. Rather, I'll put it differently, the reason that these two currencies are moving is because the two currencies paired together precisely are the ones that are being traded. So you can see here we have this Japanese yen is starting to peter off. We have the Australian dollar, which is starting to pick up. So if we just do a test here, I'm just going to buy at market here. Just going to put stop down here. We have an hourly demand down here. It's just a short-term trade. Put this at the 50 line. We'll kind of see how this plays out here. Okay, it's just a test just to kind of illustrate what's going on. But you can see now that they're starting to move in towards each other. This is probably not sustainable, but we don't know. And so what we could do is we could just just move our stop, let it fall along, and just open this up and just watch it do what it's going to do. But you almost can't go to the toilet when you're using these, when you're trading like this. But we want this to come to around the 50%, and then we'll be happy. This is just an example to show you what we've been doing today. Rather we. I don't know why I say we. It's only me. It's not like me and my cat or my dog. It's just me. So he's going to let this continue. We're probably going to see a bit of a response here. So we want to be mindful of that. This is a market order. Let's kind of let it do its thing. You see both of these are starting to move higher, so which is giving merit to the fact that this will potentially continue to move up a little bit further than expected. So it's going to move my stop. I don't want to get stopped out here. We can see the spreads here. There's no risk of being spreaded out. So I'm just going to, I don't know how far it's moved yet. 6.5 pips. Okay, so just going to let this, cool. My son's on his way home. Just let this wriggle a little bit further north. Just being mindful of what's going on here. This is super interesting. Okay, and then getting close to completion. We'll probably have a bit of a stall around here. Just keeping that available. Just going to pause this and come back to this in a second. Okay, good. I just we reached our 50% price point, which is absolutely perfect. Happy with that. This is the place where we could expect prices to go. We have this, which will provide a bit of resistance for this. Again, considering what we spoke about in the webinar yesterday, you want to look for those areas of support and resistance or supply and demand where price had a difficult time passing. We failed, we tested, we sat on it, we removed it. Which area was responsible for price trading below this low? It's this one here. So this is probably where we're going to get a bit of a price response. Keeping in mind that we could go higher because we're seeing these two begin to move towards the zero line. This is a very good indication. But yeah, so I mean, I'm not taking this and holding it and expecting it to go to the moon. This is a very small, very quick intraday, a very short-term trade scenario where I'm focusing on these two currencies relative to one another. I want to trade these two because they are trading relative to one another. Okay, so these two currencies are moving because of this pair precisely being traded. Okay, good. Well, I am going to leave it for now. If you have any questions, please let me know. Thanks for watching.